really just want to start off by getting an introduction from you, a bit on your background, and then like, how did you get into this space? What drew you to this space?
Sure. So, I first got involved in with crypto, let's say in like 2017, like most people. Um, thought it was. I also thought it was like extremely cool technology, and I remember hearing about like polymath token. I got airdropped a bunch of polymath, so I had to Google like what is this stuff and figure out. And I was like, wow, you could actually use the same crypto technology with real world assets eventually. That's a very cool theme. It took a while to get back to that full time. That's when I was still in school. But I was working at like a startup private equity firm right after college, focused on healthcare real estate. And then I moved to Global X, the ETF issuer. So I saw a lot of cool thematic and niche like tech products on the ETF side through Global X. And I started getting comfortable and kind of hearing what advisors and wealth managers, asset managers were buying and looking at. And I figured, like, man, I really like the private side though. I want to figure out how to get back there / how to overlap with crypto to some extent. And so I was doing some research, looking at some different opportunities and just doing some writing. And that's kind of when I started to tokenize this with Kyle and Herwig at Security Token Group as a whole, Security Token Market that are well known. Started doing some writing, finding clients for the advisory side, doing some research, trying to connect the dots as I could, until eventually I kind of took that on full time. And that's kind of where I got into this research role that I do a lot of right now.
Interesting. So how was it when you guys started out? Because that was, I assume that was really early and nobody really knew about security tokens and stuff like that. So how was it going out there and actually try to find clients for this?
It was interesting. I got to say, Herwig did a great job at having some clients lined up, and he's been in this for like 4 or 5 years. He advised on one of the first token offerings, like a dual listed token. Even maybe he even incepted the dual listed token. Who knows? I won't make that claim specifically, but just given the timeline, it's very possible. But so he had a pretty deep network of people that were actually interested. And then when I came in, started kind of shifting focuses towards more generalized asset managers, if you will. And it took a while. It took a couple of years of working with just smaller clients, which was great. But it was just kind of spreading us across a bunch of different industries. So we saw a lot of cool projects across the art industry, real estate, some private funds, a handful of like carbon credits and kind of ESG plays. And then even like more metaverse focused type things, which is not necessarily my forte, but now we've kind of hit that inflection point where now like $500 billion asset managers are looking at this. They're saying, what do I do? There's so much happening. I look around at all the banks. I look at all the DeFi protocols. I look at the intersection of a lot of the big thought leaders. I have to do something with this real world assets theme and tokenization. So now it's kind of cool seeing that shift to a bit more, things in my realm that I want to help bring on chain, if you will.
And so when these people come, then what are some of their issues, or what do they try to solve? What do they try to get out of you guys?
A lot of it depends on the stage they come through, which is an easy answer, but a lot of it is they'll see like use cases, they'll see the headline grabbing, private equity funds hopping in or joining a transfer agent or something like that. They'll see the use cases and say, okay, it's getting more serious. Like, how can we start exploring this, and what should we know? And it's usually pretty pertinent after like a quick, even 30-minute conversation. They'll say, wow, that's much, there's much more happening than I could have ever imagined just from that headline. So from there, it kind of gets them thinking like, wow, okay, should we just get more involved on the research side and kind of keep a tab on the market? Should we start developing a product? Should we try to join an existing venture that's already happening? I think that there's no shortage of interest and of use cases right now, which is great because it's easy to point at and get people excited. It's just a matter of them figuring out what they're ready to dedicate resources to.
Definitely. And when these people come on, then is it that they want to issue a security token, and once they have issued, do they want to be on a private blockchain, or do they want to be on a public blockchain and potentially being able to list on some kind of exchange?
That's a good question. Obviously a lot of the the banking cases are more private or permissioned. But I think a lot of the people that come to us do want that public exposure. They recognize that a lot of the banking stuff is kind of, let's call it, like internal or controlled. You join a syndicate and interact with the other banks, but they're already kind of doing that on a traditional level. So the real appeal, the end goal, is to do things publicly on a public blockchain with, let's say, accredited access to start on the investor side, eventually moving towards retail as the SEC allows. Or there's a lot of interest internationally, of course, which is also a great avenue to go. So I would say it's kind of a split, but the end goal is usually to have like a publicly listed product on a public platform.
Interesting. And is there some type of exchanges that you guys work more closely with than others? So when these people are finally ready to go public, who would you kind of go to?
I wouldn't say more closely than others. I think it's really more about the criteria. So if we have like a very big asset manager, they may love to see what Providence has done with Hamilton Lane, what they're doing with Apollo, and kind of what they have planned. More institutional focus, less like retail audience, and that may be a better fit. But at the same time, that same asset manager may say, the long-term vision to our previous point, Shar, the long-term vision would be to cater to our retail clients who we have not been doing. So maybe in the meantime, we could do something more institutionally, but we want to also build with the platforms who have that retail audience or that retail focus. So by no means are we locked to one platform, one blockchain, one service provider. Not at all. It usually comes down to just certain criteria and what we think would best suit like that project or that case in time.
Definitely. That's appealing to hear. And then kind of going back to security token market and the advisory. So the advisory, I understand, is more towards advising clients on kind of maybe how the structure and stuff should be. But could you talk a bit more about the two companies and what they offer?
Definitely. So Security Token Advisors, which I lead a lot of the research at, is the advisory arm. And that's kind of pivoting to be more of a research group, if you will. It's hard to listen. It's great to teach 10 different clients, all kind of hand-holding one-to-one, but it takes a lot of time and resources. And we've noticed a lot of it is just similar stuff, like the process that we'll go through. So rather than trying to teach everybody one by one, we're doing a more group think approach, and kind of structuring things, if you will, as like an office hours or analyst call. And that kind of will give, myself and my team more time to do better research and figure out market insights that you can't just get from a quick Google search, and then kind of relay that to clients, whether they're industry platforms, prospective issuers, other blockchains, legal groups, banks, broker dealers, anyone looking to learn. We can kind of do that all collectively. And then if there's any really premium clients who really want, they say, hey, STA, we love what we've been hearing from you guys and how we're working with you. We would love to get like a handhold type package. Then we could probably shift resources and make that happen. But that's kind of the gist on that end, focusing more on like primary market research, and just kind of mapping the ecosystem. And then Security Token Market, STM, which is probably better known in the media. We're doing a lot of the reporting just on a day-to-day basis with a lot of the headlines come out. Obviously, we have a handful of data on the secondary markets that we are kind of aggregating and synthesizing. And then we will be actually, after this call, Thor, our lead data analyst, and myself will be publishing our first edition of STM's weekly data insights to kind of give the crowd a bit more a look at what's under the hood on the secondary markets. And so we'll kind of be rolling that out on a weekly basis. But yeah, so on STM, more media centric, if you will, reporting, and then kind of tailored, bespoke research insights from a lot of the secondary activity, and then some other things in the works.
Interesting. Could you tell me more about the news thing that you were talking about? Is that like a newsletter that will come out with more kind of in-depth data? Because I know you guys are doing those videos as well, where you kind of break down what's been happening.
Yeah, so the Security Token show we have every Monday. If you're talking about weekly data insights, that will be likely coming out every Wednesday, starting today. And then we do have the What's Drippin' newsletter that Jonah Schulman originated, and Jason Baraz has been kind of taken over writing that. And that comes out also every Monday. But in terms of newsletter insights, it's more so on the STM side. We're just covering everything on the website, stm.co. New site is looking better. We're getting happy with it, and we have a lot more kind of in store that we're going to roll out over the course of the year, obviously. But that's kind of the gist on the STM side, at least. Yeah, in terms of the advisory stuff, that's going to be more of a paid program, if you will, with newsletter and kind of research insights. And yeah, that's kind of the summary there.
Right. And then shifting on. So what was really interesting, I think this was 2 years ago or something, I saw that you guys did your own offering, your own security token offering on Securitize on Avalanche. Could you touch a bit on this? What was the backstory? Why did you guys decide to do this?
Sure. So, given that we're advising clients to issue security tokens, we're doing a lot of research around it, obviously kind of sharing everything we can with the market. We figured it's great to kind of practice what you preach. So we wanted to raise capital with an eventual security token offering. We wanted to go with a retail route to show that we could do, the kind of the base layer of the fundraising under the Jobs Act, pretty much. So we did do the Reg CF. It is still open on Securitize. Be closing that up soon. But I mean, it's just really to show like how to kind of get lined up with our clients and with what we're preaching. Like, it'd be tough to preach that without going through the process, right? Especially in this industry, we want to set the example and kind of lead that way, not just be like on the sidelines talking about what we see. As much as I like doing that from a research side, it's great to be in the game as well.
Definitely. And can you share what the minimum investment size is?
I would love to. I actually can't. Just Reg CF compliance is super stringent, but everything can be found on that page at Securitize. Everything.
And what about if I invest? Are you able to talk about like what my advantages are of investing in that? Like, why should I invest?
It's more so like, thinking about the security token market as a whole relative to the industry. Like I was just kind of saying, we're providing a lot of this data and these insights. So if you think that's a value add, looking at traditional financial markets and how that's grown and kind of the role that has played, then that would really be the angle. But again, I have to tread lightly just about the capital raise itself.
Yeah, for sure. And then what about the future for you guys? Do you know where you guys are heading? Like, what kind of vision do you have?
Yeah, I think, listen, so if anyone's familiar with the company Invenium, they are pretty much a data oracle, one layer below tokenization, or I see it really a layer above tokenization. They do a lot of asset level data and credentialing from like a lot of real estate assets and private equity funds, private credit, whatever. And they're hosting a conference in Miami right now. Yesterday we were there. It was awesome to see the types of firms and the types of interest. So looking forward, it's pretty clear that the tidal wave is shifting this way. Everyone's in a similar boat, I guess, in terms of they all know we got to do something. It's just a matter of identifying what to do and then doing that. So that would be great obviously on our advisory side. That's some good ammunition we could work with and really help kind of mold that ecosystem. And then eventually, the goal is that a lot of that will spill over to the secondary markets, which positions STM to kind of capture that and then, just get better insights for that market and then kind of have like a self-feeding loop, if you will. So that's kind of how I see it, everything working together. And there's a lot of interest on, data and insights on both the primary and secondary sides. That's been pretty pertinent just in conversations yesterday at the event.
What about the market today? How do you see it? Because I feel it's definitely different than how it was 1-2 years ago. There was not I wouldn't see that much news on security tokens, tokenization as I'm doing today. What is your thought on that?
Yeah, I mean, the news, there's no shortage of news now, which is awesome. Like every day, there's at least a couple new headlines coming out, whether they're, just kind of fluff headlines or something real. I think it's great. And even if you look at the other media providers like Blockworks, even Bloomberg, CoinDesk, Cointelegraph, they're always covering tokenization now, which is great to see because, that's totally fine. That's great. And I think the real world assets theme is what's been taking a hold of both traditional financial services people and a lot of like crypto native companies, even like Block Tower Capital and a few of the more prominent hedge funds that have been around the crypto space, since like 2016, 2017. That is a telling shift when the crypto native companies, exchanges, investors start looking at tokenization. I think that's the real key. And it's already kind of happening. We even have like exchanges. LCX is an exchange. They issued a compliant tokenized bond, a corporate bond to fund their growth strategies, which is great. And that's like a crypto native company leveraging compliant tokenization to do that. So, so how do I see the market? I think it's stronger. Whether whether assets are trading up or down is not a good indicator. That's just general market forces. You could make that argument about the NASDAQ, New York Stock Exchange, anything listed on that. I think it's more so about the activity you see behind the scenes and all the different integrations, what IX Swap, InvestX have been doing. I mean, everyone's everyone's pushing the buck forward. And I think that goes pretty noticed by a lot of the companies who kind of just look at the space. So I think that's where like the research really comes into play, just to show what's happening. And then people see a couple of use cases, maybe they see 5 use cases and one catches their eye. That's all it really takes. And then they're going to dig into that one. And then eventually they become another use case. And that's kind of how things start piling on.
Definitely. I do believe in the same stuff. And then what about your vision for the industry? How do you look at the future of this? Everything kind of getting together.
I think what we've been hearing a lot is kind of bridging, let's say, centralized exchanges and decentralized exchanges, which is an interesting piece for IX Swap. I think a lot of let's say in the United States, a lot of the alternative trading systems, there's a lack of like market making strategies, which I think is kind of hurting them. I know it's easier said than done, but just given a lot of the US security law and how the dynamics actually work with market makers. But I think the future for a really robust like secondary marketplace, you'll need some centralized market makers and then DeFi support to really cover the bases, so that any newly listed asset, you could at least confidently say, the issuer can manage liquidity themselves with like buyback offers, which we've seen now from like INX, from St. Regis Aspen, and from Exodus. You could have DeFi support, liquidity pool support, so you could set that up and have that to kind of fluff the book. And then you could have, lastly, like centralized market makers to at least hold the spread and support some liquidity. And I think that just seeing those numbers improve is what will give a lot of primary issuers confidence to enter the secondary markets too. And I think that's like really the key, because even like on our advisory side, we've had a number of clients that get so excited throughout the whole process. We're teaching them, we're showing them different cases, helping structure the asset, figure out all the groups they're going to work with, and then they look at the markets at one more time and they go, I'm going to hold off for now. I don't like what I see. And it's tough. And that's kind of what's limiting new clients from entering. So if we could get that right, and if we could see some growth on that, like the secondary parts I mentioned, I think that will go a long way just for the industry as a whole.
I agree with that. There's definitely the problem with kind of the onboarding, really at the edge of it, get them to turn over and start to use the technology. But I think more and more people are seeing this, and what we're doing at InvestX at least is really trying to teach everyone about this, especially more of the decision makers. I think also something that's interesting is the recent talk we have, which is more kind of focused toward lawyers and regulations, to kind of get them to understand that, hey, this actually works now. This is definitely something we can do right now. Because a lot of people are still are very like still unsure whether it's something that is possible or it's something that doesn't that is plausible. So I think just trying to educate them on that is also going to be something really beneficial.
Definitely. And it's great seeing a lot of these securities lawyers at least be very open to this type of stuff. And that's a big key, right? Because that's kind of the base layer. If you can do it legally, then people are comfortable doing it.
And then from you, since you were kind of in the buy side earlier in your career, how do you see them being able to use this technology? I guess with VCs, how they could kind of use security tokens would be to do all their fundraising on a kind of a private platform where they already have the investors, bring them onto the kind of platform, use the technology, and then their investors are able to kind of get their equity in forms of security tokens. But what else do you see out there?
I think that, yeah, that's a great case. Obviously, that's kind of the straightforward case. I think a lot is really like the GP not being forced to sell investments by like limited partner pressure. And that could go for venture, it could go for PE, it could go for real estate, it could go for any type of fund structured that way. Also, like even when you look at on the redemption side, you don't need, if you're not fully, if you don't want to fully list on a secondary market, kind of like our conversation just before this, you could still use ATS technology or, you know, peer-to-peer swap technology to facilitate redemption. So even if you have like a couple big LPs that you promise liquidity to in some form, you can at least kind of piece that together and have like a bulletin board style system of transfer, which I think is very appealing because a lot of the big fund managers don't really care to have their asset listed and fully at the mercy of the markets trading. But they do offer redemptions already. So it's like if you have a back office who's managing all these redemptions, like Blackstone's BREIT, if anyone is familiar with that, you could just kind of, you know, digitize that whole portion and your back office could either stay the same, you could reduce, you could shift to more value creation without worrying about that whole redemption process. So I think that's a big value driver that will get a lot of the big funds comfortable on the buy side specifically, and kind of show them the use cases for this technology.
Interesting. And then I was thinking about more what you're researching on. Are you looking at more of the data, like how it is going, or are you looking also at researching utility and stuff like that of security tokens, how we can kind of better utilize it?
Yeah, I think my focuses right now are more so, I don't know if macro is the right word, but it's more so instead of looking at things like on the secondary trading side, it's more like breaking down use cases and the different buckets that initiatives could fall into, whether on the product side, whether like back office or operationally, and whether like infrastructure, because a lot of the companies I'm talking to are kind of the big banks, bigger asset managers, bigger PE funds, and I'm trying to kind of show what the landscape looks like and what they should really focus on themselves. Utility is definitely a question. Really, it comes down to, okay, is this technology going to either save money, help me make money, or provide better servicing to my clients and to my partners and whatever? So I would say utility falls under that bucket, but I use it a little, you know, I use that term kind of loosely. I'm focusing more on just like the whole macro landscape, if you will, and different trends and showing kind of how like that tokenization overlay would fit the mold.
Have any insight regarding the reason kind of seeing everyone, banks especially, starting to make their own platforms and stuff?
Yeah, I think I love that question. I think like Goldman, HSBC, I think they originally helped, let's say, Societe Generale and European Investment Bank syndicate capital for the original bond issuances over like 2018, 19, 20. And I assume that, you know, Goldman saw it, said, hey, we can make a lot of money doing this, and rolled out their own platform. That when I saw Goldman Sachs DApp come out, digital assets platform, I figured, okay, they sense money. They want to own that experience. And then I think it's great. I think it's genius for them. Obviously, companies will be comfortable working with them rather than working with tech providers. companies that are already in their network doing business, so they can just monetize that and charge their own fee, and kind of act as that face to a lot of it. But I think that's the whole thing, Shara. The banks are seeing the opportunity to monetize and commercialize things, which is why they're kind of entering, rolling out their own platforms. Yeah.
Definitely. I think you're right on point there. And then before we kind of go off, do you have any interesting stuff you've been researching that you want to share, if you can, of course?
Yeah, I think I've always liked the parallel from like exchange traded funds, ETFs, over to security tokens, and like we could call it the blockchain transferred fund that ARCA actually pioneered, if you will. And we've been seeing, there's been conversation. I'm not saying anyone's doing this right now, but the idea of creating like a fund of funds that a security token that trades and also invests in other security tokens. That idea has come up in conversation. Like I said, I don't know if anyone's actually doing it yet, but it's definitely coming up in conversation. And I think that would be great. And that would provide a lot of liquidity, or at least, additional liquidity to the underlying product. So if we have like a venture capital fund of funds, we could have a token that then buys like Spice VC, Blockchain Capital, Protos, and whatever other VC tokens are on the markets. And there's definitely some regulation involved on the whole create and redeem mechanism that kind of facilitates how ETFs actually work. But if we could kind of get towards that place, that would be awesome. I think it would bring a lot of traditional market makers over this way too, which would be cool. But that was just something, a cool idea we've been looking at. Aside from that, I mean, there's like, I'm not kidding, there's no shortage of interest from a lot of the big banks and asset managers to figure out what to do here. And even on the DeFi side, I think a lot of people are realizing, wow, as real world assets start to kind of creep up on chain and take focuses of a lot of these layer 1, layer 2 blockchains, that will also be an opportunity to converge traditional finance services with more public and decentralized protocols. So that's probably more relevant to IXSwap here. And it's definitely coming up in conversation more and more, I have to say.
Yeah. And what you mentioned with the funds, I think that's really interesting, because that will, like, if we can make these kind of ETF funds where we have like using Mahler Alpha as well, where we can just pool a lot of like different kind of asset classes, private equity, VC, something that's more common in the public markets. I mean, that could unlock a lot of like diversification benefits too.
Oh, exactly. That's actually something interesting. It's more institutionally focused, but Ondo Finance essentially. Am I still on? I'm sorry, I just said that. Ondo Finance essentially created special purpose vehicles and issued tokenized interest in them, and then bought up like BlackRock and PIMCO money market ETFs. And their whole goal was to shift stablecoin holders from USDC, generating no yield or kind of unprotected yield, into these compliant yield generating products. And that actually caught a lot of people's attention on the asset management side and the banking side, because that's a big question to answer. Like, to get my clients on chain, let's say I'm an asset manager or bank manager, I'm not going to put $300 million of client assets into USDC, because I have a duty to at least generate them like 4% or whatever treasuries are right now in the US. So by kind of creating that, Ondo is allowing people to stay on chain and just rotate that into like a money market fund. And then they created Flux Finance, which is like a collateralization protocol against those products. So that's something that is cool to see. I think some of that traffic could spill over IXSwap's way, in fact, just because it's helping validate the concept. But that's also another side piece that kind of just came to mind that I think is pretty cool and relevant to this conversation.
Definitely. All right, Peter, I want to say thank you for coming on here and share some knowledge with us. I'm going to let you get back to the lab and do some more research.
Appreciate that. Yeah, sure. No, thanks so much for the invite. This is a lot of fun. We'll be posting that the data insights shortly today. I'm excited for that, and feel free to hit me with any ideas or anything you guys would like to see covered, or anything I could kind of go deeper in, and I'm happy to do my part.
Perfect. I'm gonna send you whatever I have, and we'll share that as soon as that's out.